Hi, thanks for joining me. This is the ASX and Sector's weekly chart analysis for the week ending 19th of May 2023. First chart is the parent index. This is the ASX 200 index, or XJO is the ticker. And the first thing we can note on this chart are the highs of the range. This is up here, and this is where the market would effectively break out to new highs. There is a little bit of trading above this level, but it's mainly on lower volumes and probably won't cause too many issues as far as resistance if price pushes up that high. You can see there was a previous attempt to absorb its way through this level, which eventually failed, and price moved back, regained its composure down here, and is now pushing higher again, although trading just below this level. Now, more recently, this bar here is showing you where some weakness emerged on the financial sector, which is reflected in this chart. You can see here's the high previously, price pulled back. There was some buying off these lows by the looks, and you can see volume increased down here, and the market pushed higher in response. And now this week, we saw some sort of testing for supply. It's a little bit more violent than that, in the form of a shakeout perhaps, but I don't believe this was an engineered shakeout. It was more an organic or naturally occurring shakeout in the market. I do also note that price is trading within the range of this down bar previously as inside bars. You'll generally find reduced volume when price trades as inside bars. It's in the relative safety or the shadow of this bar. The expected response would be a push higher, but that will only occur if trading conditions remain favourable into next week. Next chart is the ASX Mid Cap Sector. The Mid Cap Sector is comprised of the bottom 50 stocks in the ASX 100 index, and as such don't include those larger financial stocks which caused the issue on this down bar here. You can see was effectively just a shakeout in this market, and a nice looking shakeout as well. You can see price formed a high through here, the market shaken out, and in response it's made that shakeout successful by pushing higher in response. The highs of the range are up here. Once again, there's a little bit of trading to the left above that, but it's on lower volumes, and I don't expect it's going to cause a lot of resistance. Maybe a little, but not a lot. Now, this market is perhaps a better reflection of the broader Australian market at the moment than the parent index, which is often pulled around by those large mega cap stocks, the big four banks, the two large miners, Telstra, and the supermarkets. Their movement in those stocks alone really move the ASX 200 index around. And this market here, which excludes most of those stocks, is often a better reflection of the broader Australian market. You can see price has found a high across here. There was some absorption and a shakeout, a push higher in response, and this week we have effectively a test for supply that down here has drawn out reduced and below average volume. That's low selling pressure. Selling pressure in the market was low as price pushed down. That allowed the market to close back up near its high and leaves the market well positioned to push higher given any sort of favourable trading conditions in the future, particularly next week. This is the ASX Small Ordinaries. This is comprised of the bottom 200 stocks in the ASX 300 index. And you can see the other two markets were really pressing higher, and this market is really moving sideways. It's not really moving high with any sort of intent at all. The highs of the range are up here, which we've been looking at on those other charts. But this market is stuck down here at the moment. And there is actually trading quite a bit higher up here, sort of up at this level. And that will cause some issues if price got up there, because there will be stale supply up there. Now, this market didn't break out like the mid caps did up here, but it also didn't push lower as seriously as the parent index did. It's trading sideways in a range within this bar's range. These are all inside bars. A little bit of supply has been drawn out, but not excessively so. You can see on this shakeout sort of bar here, a bit of increased supply was drawn out there. You've got another shakeout effectively this week, and it was above average volume. So that probably means this market will at least test for supply early in the week and then respond depending on how much supply is actually drawn out. Once again, this market is in position to move higher given favourable trading conditions, but you may see price just dip lower early in the week if that was the case, just to see if supply is continuing to be drawn out, considering there was above average volume this week. Next chart is the ASX Financial Sector. And you can see straight away that's the weakness that was reflected on the parent index, which pulled the price down, and it wasn't reflected on the mid caps because the mid caps don't include most of these stocks. Now, the highs of the range are up here, and there isn't a great deal of trading above this, a little bit, but not much, and it is once again on lower volumes. It is unlikely to cause too many issues if price was to break out to new highs. Now, this market has also performed some form of shakeout this week, and once again, it's more likely to be organic and not engineered. That doesn't mean it can't still perform its normal function. Normally, a shakeout will see prices rise in response, often with a test for supply prior, but not always. This market sees some sort of equilibrium through here. It's a bit awkward, this trading here with the higher tails is a little unclear exactly where the highs of the range is, but it's through there. Price may just push up to this level, bump its head on it, and find it can go no further. It'll need a little bit more demand to be in the market to push through this level and push up towards this. We'll have to wait and see. Once again, it will require general market trading conditions to be favourable next week. And there's no doubt that around the world at the moment, there is a few jitters in the markets and they're not performing confidently, let's say. And next chart is the ASX Metals and Mining subsector. I prefer to use this rather than the materials sector. I'm trying to show the mining companies in Australia and not necessarily some of those other industries that are reflected in the materials sector. Now, the highs of the range in this market, for all intents and purposes, are through here. You can see there was an attempt back here to absorb its way through and move towards making new highs, but that did fail and price moved lower. And since then, the market has effectively just been consolidating sideways just below this level. More recently, price moved up and it's in consolidation mode for the last month, basically moving sideways, not finding a great deal of supply when it pulls back, just a touch above average, and pushing higher here this week on exactly average volume, right on the average. Price is moving sideways. It's in consolidation mode. With the strength in the US dollar at the moment, it's putting a little bit of pressure on some of the commodities, and that's making this market just push sideways. There's no real weakness being shown. If the lows of this range were broken, then you would really see some weakness emerge, but price is just stabilising at the moment and moving sideways in response. Next chart is the ASX Gold Sector, and we've got the near-term highs of the range coming through here. There is quite a bit of trading to the left above these levels, so this isn't the level where the market would push to new highs. This is the recent highs. More recently, price is just tipping over a little bit. There's no serious weakness being shown, This is traders reflecting the price of gold in the market, which was moving higher steadily, but has recently just tipped over a little bit, mostly because of the increased strength in the US dollar just recently. And that's just made this market tip over. There's no real serious weakness being shown. For instance, look at this week's bar, spread narrowed, volume reduced to below average. Volumes have reduced the last 2 weeks in response to this bar. So while a little weakness has emerged, it's not really serious weakness at this point in time. You've got the highs of the range through here. So if the price does continue lower, I would expect to see increased support throughout this level here, just below the 7,000 level in this index. The energy sector has been a little soft more recently. The important level comes through here. You see price broke below this level, but it did regain its composure and gathered a bit of support, pushed back up to this level, closed right at it. It tried to push above, but this little narrow spread bar on lower volume, below average volume, is just a weak bar. It's not strong at all. And in response, price pushed lower again and back below this line. The last 2 weeks have seen price move higher in a grinding action, but you can see that price still hasn't moved above the high of this shakeout kind of bar. I think this bar was more reflecting the broader market than the actual sector itself, or at least partially, and prices traded inside the range of that bar for almost the previous 2 weeks. The market is looking more stable, and it's looking like it would like to push back above this level. There will be some resistance initially from the left if price does push higher, which will make it a little bit more difficult for the market to regain its place back above these levels through here, like this. The ASX Healthcare Sector has broken out more recently. It's taken its time in doing so. We've been watching it for so long. These false breaks previously, where the market wasn't able to get a foothold and continue higher, and we're trying to do it again. This is a more sustained effort this time. You can see prices now trading adjacent to this push higher. This is the real near-term highs of the range where the bulk of the effort has been made, and you can see prices pushed above it about 2 months ago, and now it's in consolidation mode, absorbing any supply that's been drawn out in response to this push higher. And once this is complete, and if successful, the market will be well placed to push higher, particularly if trading conditions are at least neutral or favourable to some extent. The market's looking okay. It's the first sustained breakout that's occurred for quite a while. The market appeared to be ready to break out right across here, and then it's done so previously but failed, and now it's looking more promising this time. Another market which has broken out more recently is the industrial sector, and we've seen this market fail many times in the past at this important 6,600 level on this chart. You can see price spent quite a bit of time through here absorbing supply and preparing for a breakout, which has occurred now, and the market is attempting to stabilise and absorb any supply that's been drawn out in response to this breakout. This bar here reflected supply being drawn out. Immediately there was a shakeout in response, and that absorbed supply. The market pushed higher in response to the shakeout, which is a positive sign and exactly what you'd like to see. And this week has effectively seen a test for supply, and volume has dropped now to below average. So selling pressure that did emerge originally through here in response to the breakout above this important level has now seen price stabilise, volumes are reducing, and that leaves this market well placed to push higher given any sort of favourable trading conditions. Now, just quickly back to the parent index. You can see where we are. You can see the weakness that emerged, mostly in response to the financials. So, in some respects, we're better off looking at the mid-cap sector if you really want a broader look at what the Australian market really is showing at the moment, which is a nice push higher, an attempt to consolidate, then a shakeout, a positive response to the shakeout, and a test for supply on lower volume this week, showing that selling pressure has reduced and this market's well placed to push higher given any sort of favourable trading conditions. If trading conditions overseas really do deteriorate considerably, price will probably push back below this important level here, and you've got support, previous support to the left through here, and then down here if required. So there are some supporting levels that you would expect, at least an attempt to support the market if weakness did really emerge, but that's not what I'm looking for at the moment. Although markets overseas are a bit jittery at the moment, this market and many of the other Australian markets do look relatively positive, and they look like they would like to go higher. So, as I keep saying, given any sort of favourable trading conditions, these markets appear that they would like to move higher. Okay, thanks for your time. See ya.